Reddit-led retail traders have turned to a different market this Monday. Or have they? Silver is apparently the new darling of Wall Street bets, with an astonishing surge in demand propelling the precious metal nearly 12% higher, pushing it beyond $30 an ounce for the first time since 2013. Unlike GameStop, which, while it caused wider volatility as investors sought out other short squeezes, trades as an unattached entity, the silver surfers are already starting to impact prices elsewhere. Yet there is also speculation that Reddit isn't necessarily behind this latest move. Though there are pro-silver posts on Wall Street Bets, the top post on the subject is against the trade, claiming that by going long on silver, you'd be directly putting money into the pockets of the exact hedge funds on the other side of GME. The same post also stated that the short squeeze was a hedge fund coordinated attack so they can keep fighting the GME fight. Essentially, there doesn't appear to be the same level of agreement, coordination, or interest in the silver trade on Wall Street Bets as there was and still is in GameStop. However, the cat might be out of the bag, with the retail trader revolution potentially now going beyond the pages of Reddit. Though it is looking like the Reddit retail trade story is going to remain in the headlines all week, there is plenty fighting for investors' attentions elsewhere. One of the big ticket items is the COVID-19 relief plan. Attempts to get it passed begin in earnest this week, and the markets may be able to get a clearer idea of which path the Democrats will take, either convincing 10 Republican senators to back the package or the route of budget reconciliation, which would require a simple majority. Progress on that front will come along anxieties about the state of the US economy, with the week providing plenty of data for investors to chew through. The final market and ISM manufacturing PMIs are released on Monday, followed by the services equivalent alongside the ADP non-farm employment change reading on Wednesday. Thursday will hopefully see the jobless claims number continue to fall, while factory orders could remain stable around 1%. Friday, of course, is the main event, the non-farm jobs report for January. December's headline figure was far uglier than anyone had forecast. It showed 140,000 jobs have been lost, rather than the estimated modest gain of 60,000. At present, forecasts are suggesting the number will bounce back with an addition of 85,000 jobs. However, non-farm estimates are notoriously hard to get right. If you look back across the last few months, you have to really dig into them to find an estimate that was pretty much on the money. As for the report's other figures, a continued reduction in the unemployment rate could help alleviate a worse than expected non-farm number, while average hourly earnings are chasing their third consecutive beat. The corporate sector still has a few giants left to update as well, especially on Tuesday when Amazon and Apple both report. The retail monolith is, like Apple the week prior, expected to post some blockbuster numbers for the fourth quarter. Analysts are looking for a 37.6% surge in revenue to $120.4 billion, which is more than the yearly GDP of Morocco, alongside an 8.2% jump in earnings to a solid $7 per share. As for Alphabet, the Google parent, meanwhile, is heading for a 2.1% rise in earnings per share to $15.68, off of an 14.8% jump in revenue to $52.9 billion. As mentioned, however, it does look like that the retail trader Reddit story is going to remain sort of at the top of the list for investors, especially since this silver trade, be it caused by Reddit or other instigators, has a far wider ripple effect than the GameSpot trade, given that it affects mining stocks. That means it affects stocks like the FTSE and any other indexes that have a significant commodity presence in their makeup.